So it really appears as if the three US markets want to push lower as we transition into trading on Thursday, the 29th of January 2015. Today, again, across all three of the US markets, we'll start with the Dow Jones Industrial Average anyway, was down 195 points after the Fed announcement spoke, saying that, of course, they were going to be patient and keep rates where they were. There was essentially no interest rate hike, and there is none for the foreseeable future. They are going to remain patient. As such, Dow Jones today again sold off 195 points. We're breaking below that 17,227 trigger. Again, outside of this symmetrical triangle, really if we close and hold these levels, then we expect lower prices on the Dow Jones Industrial Average. First target is 17,000 on the daily candlestick for the Dow Jones. Now, having a look at also the S&P 500, again, we sold off very close to 30 points, breaking outside of that symmetrical triangle, very similar between the two markets. We have an entry down here about 1,985, looking at a target down at 1,957. We haven't technically triggered as we have on the Dow Jones Industrial Average, but both charts are both indicating lower prices moving forward into Thursday's trading session. Today on the NASDAQ, we were down only 43 points, but have a look at the daily candlestick. This is what we call a perfect textbook engulfing candlestick pattern. We gapped up, we filled the open gap, which was the difference between Monday's and Tuesday's trading session. Immediately, we sold off. We closed down again 43 points on the daily candlestick. This is a beautiful two-day candlestick reversal pattern. I mean, it's almost a 100% guarantee that the NASDAQ is going to come back down and retest at least these levels down here at 4,606. I'm really paying attention to this 4,561 because it looks as if this confirms, then we've got some form of a head and shoulders chart topping pattern, not only on the NASDAQ, but when we tie that into the three resistance peaks on the Dow Jones Industrial Average, the three lower highs we've set up during the month of December and January, also combining that with the S&P when we've got the three lower highs set up over the past 2 months, and of course the four peaks which we've got as a horizontal resistance level. It really looks as if we may be setting up an intermediate top on the markets. I'll keep you updated in that pro analysis class. Going back to the NASDAQ, you can see this very nice engulfing candlestick pattern. I think it's largely due to, of course, Apple's earnings. Apple came out, it gapped up a decent amount, about $9, but during the session, it traded down about $2.30. You can see the daily candlestick. This is another opportunity for you to learn why we don't get involved in earnings plays on the actual earnings date. A lot of people would have been found out trading Apple today. They would have entered at most likely this upper wick. Let me just zoom in on the detail and show you exactly what I see at this upper wick here. And then during the day, of course, it absolutely tanked. A lot of people would have been caught with their pants around their ankles, unfortunately. And again, it just goes to show you why, of course, I give you updates once the daily candlestick forms. Generally, what we like to do is trade in the direction of the gap and go. That pretty much has gone out the window. The reason why is because look at the daily candlestick. It's absolutely ugly. It's horrible. It isn't really giving us any incentive whatsoever to trade long. And if we did have incentive to trade long, we're right at a very strong resistance level at $118.44. Apple essentially is out the window for Thursday's trading session, the 29th of January 2015. That is, of course, my humble analysis. Amazon reporting earnings after the market closed. The same is true with Baba. Pay attention to those earnings announcements. Baidu today tanked 722. We're back into this horizontal box, right? We've got a resistance level here. Oh, wrong setting. Let me just bring this up. Resistance level here, support level here. We're right smack bang in the middle. There's no reason whatsoever to be looking at getting involved in any calls or puts on Baidu at the moment. Just sit tight. It looks as if we're going to have a Bollinger Band present itself over the coming few days or even a week or so. So it is going to be a fantastic trade on the Baidu stock which we follow. Caterpillar today, it was actually up 16 cents. So I put out a Vimeo update in the private area on the Pivot Point Pro side of the website and said that it's not a good opportunity to be shorting Caterpillar now today, although the market's absolutely had a broad sell-off across the board. Caterpillar today was up, as I said, 16 cents. We're running into a very strong macro support level between the ranges of $80 and also $78.50. Let me just change to the weekly and show you this right here. It's not a good opportunity to be selling short, especially at this level. Sit tight on Caterpillar. It will present us with a better trade soon. FAS, big down day, down close to $6. We're still in this descending wedge. We haven't hit any of our entries or targets. Facebook aftermarket at the moment is down about $2 or about 3%. It's trading at about about 74.40 or 74.30 at the moment. Of course, that's subject to change. Let the daily occur, and then we'll trade the gap and go if in fact it continues in that downside direction. There's a very good chance that if Facebook is gapping down and the overall markets look weak, that this is going to be a genuine gap and go style trade. You can see Apple sort of like the white dove in regards to the market at the moment. It's the only real stock showing relative strength in what appears to be a very sort of weak market. Now, Google again is reporting earnings after the close. We'll sit tight on that one. GoPro is a very good trade. You know my thoughts on GoPro. GoPro and Tesla, by the way, are the ones which I'm looking for Thursday's trading session. When we have a look at Halliburton, Halliburton was a stock which we got stopped out of today. I put up an update yesterday. Gave you two new stop levels, $40.90 and $40.49. When we started entering it around this level and at 41.22, you can see that we only had about 33 cents of risk to make about $5 on this particular trade. Now that risk reward ratio was incredible, and in this particular instance it didn't work out. So Halliburton is a little bit frustrating. It was down about 3% today, but it doesn't matter whether you got out at $40.90 or $40.49. We adhered to our entry, our target, and our stop, and by mitigating our risk to at least under 40 cents, the loss which we encountered in Halliburton was very minimal, right? It didn't really hurt or sting as much as what it would have if we didn't place a stop, and here we are trading at $39.47. So pat yourself on the back. In regards to this Halliburton trade, it may have even been a break-even trade, but for me personally, I did lose money trading Halliburton, swing trading from the breakout about 3 or 4 days ago, right? This happens in the market, it's okay. The same is true with that Baidu trade. We've actually had 2 losing trades, which happens from time to time. Netflix today is the first candlestick which we have been wanting to see. It's what we call an inside day dark candlestick. It's at this resistance level. We said that we wanted to see this pull back or at least slow down, and we've seen the first candlestick indicating that that's going to be the case on Netflix. There's going to be a very good trade on Netflix come this weekend in that pro analysis class. Tesla's another trade which I'm keeping a very, very close eye on. Over the weekend, I had a 193 bearish entry to the downside, right? That's because, of course, we were working with these 3 candlesticks right here, or without these 3 candlesticks putting into account this week. I mean, we're looking at this one white candlestick right here. If this fails, it's going to be another rollover trade. The reason why is because we're making lower lows, we're making lower highs. We were looking for a rejection at the 10 and the 20 exponential moving average. We're starting to see that today on Tesla. We have a very nice engulfing candlestick pattern. 2 entries which I'm going to leave you with. 197.25 is an aggressive entry. The 193.12 is a more conservative entry to the downside. Both look really good. We've got earnings, a way out in the distance, so it's not really going to influence this trade whatsoever. It's exactly what we expected on Tesla to occur. It looks as if it's going to trigger tomorrow, and with the markets looking so weak, it's really a go-to trade. The same is true with Twitter. We're still quite a way away from that 36.43 entry, but it looks as if we're starting to break out of this symmetrical triangle, which is very, very good for us in the way of getting involved in active trades for the end of the week. Thanks a lot for being patient during this earnings season. It's been really good that you've been understanding, and there's been a lot of, I guess, opportunities that just reinforces the reasons and the rules which we have around earnings, where we don't hold into earnings, and why we don't trade the daily candle of that earnings announcement. Anything is up in the air. We love to trade the daily break, the gap and go, or the fade if in fact it sets up. The fade is what's occurring on Apple, but given the risk and reward, again, I don't really like it. So that's my update for you as at Wednesday afternoon, the 28th of January. Thank you so much. I'll see you all most likely Thursday at the end of market close. All the best. Goodbye.